Money. It's the lifeblood of our global civilization. Without it, the intricate web of trade and commerce that connects every corner of the world would unravel. From the bustling marketplaces of ancient Rome, where merchants bartered goods and services, to the lightning-fast digital transactions of today, money has always been the engine of commerce. It has evolved alongside human society, adapting to the needs and technologies of each era. It's the invisible hand that guides our economies, influencing decisions, shaping policies, and driving innovation. Economists and policymakers spend their careers studying its movements and impacts, trying to predict and harness its power. But have you ever stopped to wonder where it all began? How did we come to rely so heavily on this abstract concept? What were the first forms of money, and how did they transform human society? How did we go from trading goats and grains to tapping our phones for payments? The journey of money is a tale of human ingenuity and adaptation. Buckle up, because we're about to embark on a fascinating journey through the entire history of money. We'll explore the earliest forms of barter, where people traded goods directly, and how this system, while effective, had its limitations. We'll explore the earliest forms of barter, where people traded goods directly. Imagine a world where you had to find someone who not only had what you wanted but also wanted what you had. It was a complex and often inefficient system. We'll delve into the invention of the first coins, those shiny symbols of value that revolutionized trade. Coins made transactions simpler and more reliable, providing a standardized measure of value that everyone could trust. And we'll trace the evolution of money all the way to the digital age, where cryptocurrencies like Bitcoin are challenging the very foundations of our financial systems. These digital currencies promise a new era of decentralized finance, free from the control of traditional banks and governments. So, whether you're a history buff, a financial enthusiast, or simply curious about the origins of that dollar bill in your pocket, join me as we unravel the captivating story of money. From ancient barter systems to the rise of digital currencies, this journey will reveal how money has shaped our world and continues to influence our future. Before money, there was barter. This was the primary method of trade for thousands of years, long before the invention of coins or paper currency. Imagine a world without cash, credit cards, or even those crumpled dollar bills. In such a world, the value of goods and services was determined by direct negotiation between individuals. That was life in the earliest human societies. Communities relied on the barter system to meet their needs, exchanging items they had in surplus for those they lacked. If you were a farmer and needed a new clay pot, you'd have to find a potter who was willing to trade their craftsmanship for some of your crops. This required not just the right goods, but also the right timing and mutual need. It was like a giant trading game, with goods and services as the cards. Each trade was a strategic move, requiring skill and negotiation to ensure both parties were satisfied. This system worked, but it had its limitations. The biggest challenge was the double coincidence of wants, finding someone who had what you needed and wanted what you had. Finding someone who had what you needed and wanted what you had was no easy feat. It often required extensive searching and negotiation, which could be time-consuming and inefficient. Imagine trying to trade a cow for a loaf of bread. The disparity in value made such trades impractical and often impossible. The value of goods wasn't always clear-cut either. Different people valued items differently based on their needs, preferences, and circumstances. How many chickens equaled a goat? The answer varied widely and was often a matter of intense negotiation. It all depended on who was doing the trading and how desperate they were for the goods. Desperation could drive up the perceived value of an item, leading to unequal trades. The barter system was a bit like a puzzle, sometimes frustrating but always intriguing. Each trade was a piece of the larger economic picture, fitting together in complex and often unpredictable ways. It highlighted the fundamental human desire to exchange goods and services, a desire that would eventually lead to the development of a more efficient system: money. Money simplified transactions, providing a common measure of value and a medium of exchange that was widely accepted. With the advent of money, trade became more straightforward. Coins and later paper currency allowed people to trade more easily and efficiently, paving the way for the complex economies we have today. Today, we have moved even further, with digital currencies and electronic transactions. But it all started with the simple act of bartering, trading goods like trading cards in a game that has evolved over millennia. Around 600 BCE, a revolutionary idea took hold in the ancient kingdom of Lydia, in modern-day Turkey. The first coins. These weren't just any pieces of metal, they were standardized units of value. Made from electrum, a naturally occurring mix of gold and silver, these coins were stamped with images to signify their worth. Imagine the impact. No longer did people have to haggle over the value of chickens and goats. Now they had a universally recognized medium of exchange. Trade became smoother, faster, and more efficient. These early coins were like the first seeds of a global economy, connecting people and cultures through the power of standardized currency. The invention of coins was a pivotal moment in human history, marking a significant shift from the cumbersome barter system to a more sophisticated monetary system. It paved the way for the development of more complex economies and laid the foundation for the financial systems we know today. Section 4. Paper money takes center stage. From promises to payments. Carrying around pockets full of heavy coins wasn't exactly convenient, especially for large transactions. Imagine trying to buy a house or a large shipment of goods with bags of coins. The sheer weight and volume made it impractical and cumbersome. Enter paper money, a lighter and more portable alternative. This innovation marked a significant shift in how people conducted business. No longer did they need to carry heavy metal coins, instead they could use lightweight paper notes. The earliest forms of paper money emerged in China during the Tang dynasty, between 618 and 907 CE, as promissory notes. These notes were initially used by merchants and traders who needed a more efficient way to handle large transactions. These notes were essentially IOUs issued by merchants, representing a promise to pay the bearer a certain amount of copper coins. This system allowed for greater flexibility and security in trade as the notes could be easily transferred and redeemed. Over time, these promissory notes evolved into official government-issued currency during the Song dynasty, from 960 to 1279 CE. The government saw the benefits of a standardized currency and began to regulate and issue paper money. Paper money offered several advantages over coins. It was not only lighter and easier to carry, but also more convenient for large transactions. This made it an attractive option for both merchants and consumers. It was easier to transport, reducing the physical burden on those who needed to move large sums of money. This ease of transport facilitated trade over longer distances and contributed to the growth of commerce. Paper money could be issued in larger denominations, making it suitable for significant transactions. This was particularly useful in an era where large-scale trade was becoming increasingly common, and reduced the reliance on precious metals, which were sometimes scarce. The use of paper money helped to alleviate the pressure on metal resources and provided a more sustainable economic model. The adoption of paper money spread gradually westward, reaching Europe in the 13th century. European traders and explorers brought back the concept from their travels, leading to its eventual integration into Western economies. It revolutionized trade and finance, making transactions more efficient and laying the groundwork for the modern banking systems we rely on today. The introduction of paper money was a pivotal moment in economic history, transforming the way people conducted business and interacted with money. Section 5. The Gold Standard. A Golden Era? In the 19th century, a new chapter unfolded in the history of money, the gold standard. Under this system, countries pegged their currencies to a specific amount of gold. This meant that you could, in theory, walk into a bank and exchange your paper money for its equivalent value in gold. The gold standard aimed to create stability and facilitate international trade. Since currencies were directly linked to gold, their exchange rates were fixed. This made it easier for countries to trade with each other, knowing that the value of their money wouldn't fluctuate wildly. However, the gold standard wasn't without its critics. It limited the amount of money a country could print, which sometimes hindered economic growth. It also made countries vulnerable to fluctuations in the price of gold. The gold standard, like a shiny but rigid gold bar, ultimately proved too inflexible for the complexities of the modern global economy. Section 6. The Digital Revolution. Bytes over bills. Fast forward to the late 20th and early 21st centuries, and the world witnessed a digital revolution that would profoundly impact the way we interact with money. The rise of computers and the internet paved the way for electronic banking, online transactions, and the birth of digital currencies. Suddenly we could transfer funds, pay bills, and even invest in the stock market with a few clicks of a mouse. The physical act of exchanging cash became increasingly less common as digital transactions offered speed, convenience, and global reach. This shift towards a cashless society has been gradual but transformative, fundamentally altering our relationship with money. The digital revolution has ushered in an era of unprecedented financial innovation, paving the way for new possibilities and challenges in the world of money.